China's stock market appears headed for more trouble as the government there scrambles to avert a crisis. In less than a month, the market there has nosedived, dropping by almost 30%, and more than $3.2 trillion equivalent with American wealth has been wiped out in 3 weeks. So, what does all this mean for the global markets? To talk more about this, we're pleased to be joined by Managing Director for Absolute Investment Management, Bob Wiedemer, who is Skyping in from Washington, D.C. Bob is also the author of the Wall Street Journal bestseller Aftershock. And joining us via telephone from Chicago, Steve Cortes, the founder of Veracruz TJM. Gentlemen, our thanks to both of you. Bob, we'll begin with you. What is going on with China's stock market?
Well, it went kind of straight up, and now it's heading straight down. And the market is actually still up for the last year, almost 60 to 70%. So it's kind of coming down from what happened before. But what's interesting is that the Chinese government's not been able to push it back up, despite all their measures, including banning IPOs, offering more leverage to investors, and temporarily, about 27% of the stocks listed on Chinese exchanges are not being traded because they're a little concerned the prices might go down.
So, Steve, let me turn to you. How exposed are foreign investors in that Chinese market?
You know, JD, I do think foreigners are very exposed, not directly because there's such preclusions really to foreigners directly investing in domestic Chinese shares. But look, China's the second biggest economy in the world. It's a central planning disaster, by the way. And it's a good warning for America, who unfortunately is going down that path. But to get back to your question, the reason it matters is there's still a lot of fallout beyond China. For instance, commodity prices have been absolutely tumbling. The Australian dollar today hit a 6-year low. Crude oil is really on its heels. Copper is descending extremely fast. So China, because of its mere size and because it has been really the growth story of the world recently, China has a global footprint and impact. So it is impacting assets even here in the United States. For instance, American-based energy companies are trading very poorly lately, and I think that is primarily because of the fierce selling in China.
Well, Bob, we heard Steve outline some of the problems and concerns back here stateside. Do you agree with him, or what should be the biggest concerns Americans have about what's going on right now in China?
Well, I think Steve pointed out something very important. It's not just the Chinese market that's in trouble. The economy is in trouble, too. As he pointed out, commodities are heading down. Most people's guess is that China's growth is far less than what the government says. So that's clearly an issue for our companies, for our economy. And the fact that the stock market's going down despite government manipulation, I think as Steve said, it's a centrally planned economy. If those central planners are failing in one area, the stock market, they're probably failing in other areas to boost the economy as well. So I think it's got a huge impact on the U.S. and on Europe and on Japan, everybody.
So let's continue in the vein, since we've pointed out the notion of a planned economy. The plans to deal with the problems haven't worked so far. Steve, what should the Chinese be doing, in your opinion?
Well, JD, honestly, I don't think there's much they can do at this point. They've painted themselves into such a box. And I think, central planning always fails, and it always ends badly, whether it's the Soviet Union in the 1950s, Japan in the 1980s, or China now. So I don't think there's a lot they can do. They've been very drastic, by the way, in their measures. They said if you sell with an S, we will put you in a cell with a C. So they have tried to literally criminalize for some folks and some firms selling their stocks, and yet the market still goes down. So that, to me, signals that we're in an incredibly dangerous situation there. And I think investors globally, this is a time to be cautious. I think it's a time to stick to prosaic, boring, and mostly domestically oriented investments. I don't think it's a time to be aggressive or too global.
A minute and a half remains, gentlemen. Bob, we've heard so much about China basically buying up our debt, financing what goes on here. Is there any scenario, given the severity of what's going on, would they call that money home? Do you see anything like that happening?
Well, there's a lot of people do talk about that as being a big issue, that China kind of has this under their heel in a sense. But in reality, if China wanted to sell all their debt, there's a guy down the street. I'm in Washington, D.C., but I mean, there's a woman down the street on Constitution Avenue that could just simply buy $1 trillion worth of debt tomorrow. Would that be scary? Yeah, but they could print a lot of money. They bought a few trillion already. Another trillion's not going to break them. But obviously, I'm not a big fan of all this money printing. I think it's going to lead us down a bad road later on. So it would shake up the markets, but the reality is the Fed could buy whatever the Chinese sell. That's the short-term solution, creating, of course, a very bad long-term problem for us.
As you outline that, it just sounds like hyperinflation is on the way somehow, someday. And on that less than rosy scenario back here at home, gentlemen, we thank you for your input on what's going on in China. Bob Wiedemer, author of the book Aftershock, and Steve Cortes joining us by phone from Chicago. Well, you don't need to phone in your opinion. No, there are other ways to get it to me. You can email me, use Facebook. There's also Twitter. And don't forget our website, newsmaxtv.com/comments. We're coming back.